morning, everyone. I'm your host, Ryan Rasbiani. Welcome to Market Simplified on the Place Your Trades Network. We're the network that focuses on trading daily options using CME Group's event contracts to trade the indexes, metals, energies, and Bitcoin's futures market. Today's broadcast is brought to you by Tradeovate, which has built the custom app dedicated to trading event contracts, which is what we all use here at Place Your Trades. So welcome. Welcome to episode 3, I believe it is. It's our third time streaming together. Hope you guys are all having a great morning this Thursday. A lot of stuff has happened this past week that we're going to cover. So if you're new to our show, we got 3 segments: market overview, today's price action, and then we jump into the event contracts. So just to give you a little bit of background, if you're new to the show or you haven't been here before, if you're just watching, I'm Ryan. I'm a trader in the world of the stock market. You can find me on Twitter at Ryan Rasbiani, my name right there. And I've been focusing on creating financial education content and trying to help people learn about the world of finance because it's made such a huge impact in my personal life. So I want to be able to help give it back, and I'm happy to partner with Tradeovate to do this using their really cool tool, which I'm going to tell you guys shortly after. So jumping into the market overview, this morning we got some really good, well, not good, we got some data um, on the situation that's happening with our GDP. So I'm just going to share my screen with you guys so you guys can see what I'm looking at. So I got some market data for you here. So the GDP data came in actually not so great versus last time, but better than forecasted. So that was good. Markets like that kind of. We'll discuss how markets reacted. And we got initial jobless claims, which came in lower. So it wasn't too crazy. And pending home sales was just really bad. So that data wasn't good, and markets reflected that almost directly. The bigger thing that happened was, and we'll go into charts soon, is that yesterday Jerome Powell was at a conference with a lot of the central bank leaders, and they were discussing further rate hikes. And this is a thing that they've been saying for a while now. And tomorrow's PCE print will give us essentially a direct insight as to what happens with the next rate hike. All of them were harping on, especially for the ECB and Jerome Powell. Lagarde and Jerome Powell were both harping significantly on the fact that core inflation, or core PCE, has not gone down. It's been steady there. It's kind of been stuck. If you look at core, it has been stuck and flat around 4.7, fluctuating slightly um, this past calendar year. So tomorrow we're forecasted to come in flat again, which is not good because they've done so much tightening in such a short amount of time. But Jerome Powell was insisting and stating that, hey, we have had a restrictive financial policy, but it has not been tight for long enough in order to kind of keep us in this area where it's like, hey, it's tight. It's been tight long enough for things to come down, and then for us to kind of turn the valve down and kind of cool things off and kind of break things down. I have a thread on my Twitter that I kind of did to summarize it. I'll give you some of the key points off of that. It said Powell expects core inflation to remain at 4.7% until 2025, risking entrenchment. That's that sticky inflation. That the possibility of a recession, however, was acknowledged by Jerome Powell and Bailey, but was not considered to be the base case. That's a good thing. So they're saying that there's still chances of what they call a soft landing versus a hard landing, which would be high unemployment, deep recession, things getting really ugly. The central bankers were prioritizing taming inflation despite potential economic challenges that we're having, and if they're and I'm just going to put the. Let me just put the graph on the screen so you guys can see it. You can see here that's how far they will go. You can see here that all across the 4 banks, you got the European Central Bank, our Federal Reserve, Bank of Canada, and Bank of England. Japan has not done any hikes. They were there, but they haven't done any hikes, so they weren't included in this graph. And they're actually very bullish that their inflation is going to be fine. But you can see across the board here, we've been raising rates very quickly. I think Europe are going to get to 4 with their next hike. The Federal Reserve's over 5 now. They paused or skipped. We got Canada paused, but then they turned the valve back on, raised again, and England is right there at 5%. We're essentially on our tails, and I believe the guard kind of hinted, hey, we're going to be raising one more time to 5.2%. So that's, yeah. See, Lagarde suggests ECB will increase rates one more time, likely next month. And I'll be fully transparent with you guys. I think that the U.S. will probably get another rate hike very soon too, especially if the core number doesn't come down. They've noted and stated that the reason we didn't raise rates come this last rate hike is simply because of the banking crisis. The banking crisis and turmoil has been hard, but they've now done brand new stress testing on the banks. The bank stress testing came out very good, which means that the banks can handle it, which means that, hey, okay, we can turn the valve up a little bit higher, tighten things up a little bit more, and markets won't like that for a short amount of time. Again, 25 basis points. We'll talk about it. So let's do some price action for today. I want to go over some of the price action that's happening today. It's been an interesting day, but let me just turn these indicators off. Let's go raw charts. Take a look at what Tesla's doing, for example. You guys know me. Oh, not Test BTC, TSLA. We can see here that Tesla, let's not turn all the indicators off right just now. We can see that Tesla, let's go to something of a tighter time frame. You can see here that started the day off and sold off significantly, and now it's kind of starting to recover. It's kind of fighting back to try to like get its sea legs back there, but it sold off. There was this gap. The gap filled very quickly. That Tesla has been very, very, very volatile. I think we talked about it last time. They ran up significantly on the news of the charger. They're charging network expansions with GM and Ford. But again, from a fundamental standpoint, that doesn't really do too much in terms of revenue. It's good, but it doesn't do too much enough to justify the massive, massive run up that the stock has had. And that's okay. I mean, things take time to be able to kind of readjust and get us to the point where we need to be with it. But Tesla kind of did its thing, came down, and now it's kind of starting to recover and kind of work its way up. Now, Apple's the more interesting one here because Apple is teetering on the edge of touching that $3 trillion market cap, which would be around $190.30. And if you guys remember last time this happened, the stock sold off significantly right after. It's like they kind of ran it up into the $3 trillion market cap area, and then they were like, okay, cool, this is fun, we got it there, and now let's reverse it, and we kind of flush down. Now, mind you, it was quantitative tightening was on the tails of that, but just something to kind of keep in mind that 3 trillion last time was a significant mental resistance there. Nvidia, which has been on the headlines significantly for the world of AI and discussion of around the world of AI, has had some turmoil. So if we look at AI, I'll go to the 1 hour for Nvidia to kind of see how we've been operating. We can see that Nvidia had a massive, massive run up. Earnings extended Q2, everything's good, and then the news came out of, oh, the U.S. might be doing some restrictions on AI chips to China, which the markets didn't like. Clearly, it sold off 3% and then another 2.7% clip here. But then I believe it was the CFO of Nvidia came out and said, hey, listen, we're aware of this situation. We're still keeping strong to our forecast for Q2 of the 11 billion. We're not turning our forecasts around. Everything is straightforward. And personally, I think it's a bit of saber rattling that's happening around this situation of the AI chip ban to China. I wouldn't be surprised if it comes in some shape or form, but I don't know if it's going to be a full-on ban that completely destroys or hurts Nvidia. That'd be kind of anti-capitalistic, but we'll see. But we can see here that Nvidia has formed this brand new resistance and kind of has this support trend line down here. But if these things start to give out, there's volume gaps here which can kind of come down. The 200 MA is really, it's kind of saving grace if things get ugly and we lose that 400. We came down to 401, so that 400 acted as like a psychological support bounce area. Again, coincidentally with the comments of their CFO. The last one I want to take a look at with you guys really quickly is Marathon Digital Holdings, actually. This is the Bitcoin crypto miner out of the US, and they've been on a bit of a tear. So let me turn off some of this stuff so you guys can see things a little bit clearer. And they've been on a tear. Uh, Bitcoin's been interesting lately. It's been in the news, the discussions of the spot ETF, and you guys can trade the Bitcoin futures with Trade of 8. So that's another option you have without taking out a lot of the risk factors of actually trading raw Bitcoin futures. But you can see you're forming this new rising wedge. And I'm not too crazy about rising wedges because if they break down very quickly, they come down very fast. The same way a falling wedge can kind of reverse, and we had one the other day on SPY, which we'll go to next. And this is cool, but you have to realize this, that in order for these crypto miners to go up, the fundamentals unfortunately don't catch up to them as quick enough as they should. Like Bitcoin has been kind of trading sideways for the past 7, 8, 9 trading days. We really need, if you want Marathon to truly go up and sustain that hold of around that $13, $14, $15 range, you're going to need to have Yeah, you can see here I got the fibs here to get to that $15 range. You're gonna need Bitcoin to get to that 31.5, 32 area for this to be able to kind of get and step into the next zone, step into the next level. So let's go to ES. So ES, the S&P 500 E-mini futures, that's what I use to trade SPY. I watch that very, very closely because once that moves, SPY moves. And it was actually before we jumped on, I was doing my morning trading, which I love doing. I do it with my team, and all that. So I work with my team to do that. And I was telling them, I was like, look, in order for SPY to go up, we need to get over this 9 EMA here. And we're seeing now that we're kind of cycling around it. So every time SPY, so I personally use the 3-minute interval to enter and exit my trades. It's my personal preference. The 1 minute is too jumpy for me. It has too many fake outs, and the 5 minute is, I feel like I missed too many entries. And this is after like a long amount of testing with the 1, the 2, the 5, the 3. I found the 3 to be kind of the Goldilocks interval that I like using. And I found, and every time we would hit that 9 EMA, it would kind of like, it rejected twice. So I was like, all right, cool. I take my position from here to here, exit. It was actually very fun. It was like, got it to the top of the contract, exited from the top of the contract within like two cents, which is $2 in terms of options contracts. And then we're kind of like bouncing here. I call this the sandwich zone. Whenever you're between the 50 and the 9, I call it the sandwich zone. It's kind of there, but in order to really go up, we can see that we've got significant resistance here around this 44.30 75 range, and then once we get over that, we need to kind of get over this 44.34 75 to 44.38 75 range to kind of get the next leg up. And I think markets are really holding their breath for tomorrow's PCE data, which we just discussed earlier in the show. If that comes in, if that comes in good, you're going to see markets really react to that, because that means that, okay, we can kind of like hold our breath. We don't have to be too worried about, we can kind of exhale, excuse me, we don't have to hold our breath. We can exhale. Markets can kind of like, but okay, maybe they'll skip, the skip discussion comes around again. But if PCE is hot, this is the ugly side of the coin that I really don't want to discuss too much. But of course, it wouldn't be good if I didn't discuss it. It wouldn't be fair, because this is the thing that I always tell my team. I always post this on Twitter. It's like, make a plan for both sides of the trade, and then whichever side starts to execute, jump on that and execute that trade. And that's what I found that's helped me personally in my trading career to get much better. When I was biased, it was very hard, but once I kind of came out of that bias, things started kind of like flowing, getting much better for me. So as you can see here, we've got this this support trend line, which I'm going to extend now, because this was drawn last night. We broke out of this channel here, of this resistance trend line, this yellow one, and then we kind of came down, but now we're testing it, and it's kind of trying to form support here at this little crossroad of 44.10 to go up. If we get bad PCE data tomorrow, and you want to play those trade evade contracts, which I'll show you in a second, I wouldn't be surprised if this comes down and breaks this 44.10, and then maybe even breaking this very strong 4400 support range. So we should actually put that level in here so we kind of have it. There we go, so 44. So I'm going to actually set it to 4400 just to kind of play with it a little bit, right? So I wouldn't be surprised if we come down here, and then if we lose this, we kind of have a path down very quickly. And I don't think it's going to be too pretty, personally, if things go well. But if things go well, I wouldn't be shocked if we come and we rip through these and we test that 44.34 75, 44.38 range and kind of start to go up. So looking at today has been very choppy, right? We've been trading within a range. Now, I know that it's only around 11:15 a.m. Eastern Standard Time. We've only been open for about 3 trading hours now, so you only have 3 candles to work off of. But looking at it, you can see that even for the past few days, we've been really stuck within this range. So now going to our to our event contracts. So like when you come to the Trade Evade, this is your main page that you see. I'm looking at the E-mini futures, but as I discussed in the beginning of the show, you can do NASDAQ, you can do Dow Jones, crude oil, gold, Russell, the dollar, nat gas, silver, copper, and Bitcoin. For those Bitcoin folks, if you want, you can do those as well. I stick to ES. That's just what I know best. But again, you can do it for all of these. So if it doesn't have to just be one single thing. So let's click on ES. And you can see, or you can click on strike list to kind of see what you want to do. And you can see down here, it'll jump up and kind of adjust, but you have your chart here. So let's go to the strike list. So as we were discussing, we're having trouble getting over 44. What is this? Hold on one second. we're having trouble getting over 44.30. So if we can get over 44.30, that's kind of the area that I'm watching. So personally, taking a look at 44.30, so you can see your spread here. So the cool thing about these contracts, really quick overview for you. These are trade evade contracts. You're saying yes, you're going to be above this price, or no, you're not going to be above this price by the time of close. These are raw values. They're not like options contracts where they're multiplied by 100. So you're not paying 875 a contract, you're actually paying 875. These are zero DTEs. They will expire at the end of the day. If you are correct, you can cash out at $20 a contract. If you're not correct, it goes to zero and you're done. You're kind of out. Anytime during the day, these contract prices fluctuate. If you want to take profits or cut your losses and you think things aren't going well, you have the ability to do so. So they move just like options contracts, except at the end of the day, if you're correct, it doesn't expire. So you're kind of saying like, hey, if I think yes, we're going to close over 44.30, you can purchase this one contract for $9.25. At the end of the day, if it's correct and we're over 44.30, even if it's 44.30.01, this will be 20 bucks. You can cash out, walk away, have a nice day, stuff like that, right? But if you want to say like, no, I don't think we're going to close over 44.30, which I'm kind of inclined to say so, but we'll look at more data points to be able to discuss this. You can purchase this and say, no, we're not going to close, so you'll buy it at 11. If you're correct, perfect. You can cash out at 20 at the end of the day or anytime during the day. Let's say it gets a 19, 17, 18, whatever you want to cash out. Cool. But if you get to a point where you're saying like, no, this isn't correct, we're kind of falling out of the zone, I might be wrong, you can kind of cut your losses and walk away. You don't have to let it go to zero. So that's kind of the cool thing there. So now let's discuss our strategy. Where do we think the markets are going to be going? So personally, if I want to give myself like a bit of a buffer zone here, I'm seeing that, like again, I'm paralleling SPY in this eye, I'm looking at ES in this eye here, and looking at this situation here, I can see that we do also have a resistance trend line here, right? Again, I like to go off of charts. Sometimes they're not the prettiest of things to follow directly, but it is what it is. So if we can break out of this, and let me just turn my Kelter bands on for a second. So we have room on the Kelter bands, which is another indicator that I've learned to use and I'm starting to like using a lot. If we can break over this to get to the top Kelter band, we can close over 44.34. But again, I'm keeping in the back of my head what PCE is coming. So we might have, even if the markets do very, very well, we can get some deleveraging at the end of the day where people kind of sell off. And these are zero DTEs. And I'm playing this game for into the close. I'm not someone who's going to sell it before the end of the day. The risk is so small in these contracts because they're so affordable that if I'm going to buy it, I'm just going to let it go into the end of the day and see what happens with my lottery ticket. So personally, if I'm watching this kind of situation, and I'm seeing here that for the past, essentially since yesterday, even for the longest amount of time, we cannot close over 44.30. Right, again, this is 44, just double checking one more time, 44.30.75, so we can't close over 44.30. So for me, I'm very inclined to say no, we don't close over 44.30. So I'd be watching for another test of this trend line here. So we're seeing here we got two tests, and then buying those contracts for no, we're not going to get over 44.30. So that's kind of what I'm watching there personally. And the reason being, it's not that there's anything wrong, right? Like I could be wrong. We break out of this trend line here, we get to 44.30.75, and it closes it there. My contracts will expire worthless. But if I'm right and we don't close over 44.30, which is somewhere around here, we can do that. Now, if you want to kind of give yourself a little bit of a buffer room, and you're like, well, maybe 44.40, you can do that too. You can purchase the no's for 44.40. Now, they're a little bit more pricey, so the reward's a little bit less, but you can do that as well and kind of go into it. Now, if you're very bullish on the situation, you're like, well, I think we're gonna close over 44.30, but not over 44.40. You can go with the yes one right here. It kind of makes a little bit more sense. Like, okay, we're not gonna go over 44.40, but we're gonna go over 44.30. So I'd go with yes here. So personally, me kind of putting my line in the sand style situation. What I would be doing is I'd be watching. I'm seeing that this 44.40 here, possible breakout, very, very strong candle on the hourly. Volume is kind of lower. I'm checking the volume on SPY as well. Volume, again, it's natural for the second hour, the second to third hour of the day for things to kind of cool off a little bit. It's natural going into the middle of the day. So personally, I would go with yes, we close over 44.30, Just because I know that I don't think we're going to close over 44.40, but I think we could close over 44.30. So that's kind of like where I would put my line in the sand here for today. But again, I could be very wrong because we can get some significant deleveraging into the end of the day as people get scared for what's coming down the pipeline tomorrow morning at 8:30 a.m. with that PCE. I'm just pulling up really quickly to give you guys what the new estimates are, because sometimes the analysts put out their estimates, they adjust it, and I don't want to kind of give you guys the wrong number here, so I'm just pulling that up very, very quickly. Okay. So yeah, so core is estimated for year over year. Core, again, I'm focusing more on core because that's the most important one right now, because everyone's been talking about it. But core is estimated to come in at flat 4.7 for year over year and flat 0.4 for month over month. Regular PC, in case you're curious, is estimated to come in at a little higher for month over month from 0.4 to 0.5, and year over year is estimated to come in a little higher from 4.4 to 4.6. That's actually not good, right? The regular PC numbers weren't in there when I was looking at it earlier this morning. So I'm going to readjust. Well, these are 0 DTE. So tomorrow, like, let's discuss what could happen tomorrow again one more time, right? So for today, I'm saying that we can close over 44.30, possibly close over 44.30. That's just my personal opinion. But if I'm playing this tomorrow and the data comes out like it is here, I'd be probably looking for, we cannot close over 44.20. So again, we're talking tomorrow's contracts, right? So I'd go with a no here. But again, it'd be cool if we could buy them for tomorrow now, but we can't. These are 0 DTE. So for today, I'm going to go with we close over 44.30. Actually, let me just let me reassess one more time because I have 44.30 here. You know what? Last minute fumble on the play. I'm going to go with no. We don't close over 44.30. I think that with this new estimate that's out, people are going to deleverage into the close of the day. They've run it up, deleverage into the end of the day. So I'm going to change my play here. I'm going to go with no over 44.30. Closing over 44.30, no. And then tomorrow I'll probably be looking at these 44.20s or even 44.10s, depending on how violent the markets react in the morning and how they're doing it in the middle of the day. All right. So we did our market overview. We discussed our price action for today, and we did our event-based contracts, what strikes and why. I not only did for you today, but I even discussed a little bit of what I could possibly going into for tomorrow, which things can kind of get really, really exciting. So thank you folks for watching this. Make sure you're subscribed to our channel here on Tradeovate. Hit that like button. If you want to follow me, you can on Twitter at Ryan Razbiani. If you're curious, all my stuff is there. You can ask me questions. We can interact, have some fun. As always, thank you to Place Your Trades for hosting me and having me on the channel. Love working with you guys, and sign up for Tradeovate to be able to do those event-based contracts. They're really cool. They're a lot of fun. And it's kind of like a de-risk way, and especially if you're learning and you want to dip your foot into the futures market, it's not a bad idea to do it with these Tradeovate contracts because they're less risk, much more affordable, and you kind of have like your risk kind of gap there because of the maximum and minimum boundaries you have. The most a contract ever costs is like 19.25, and you can see that at the end of the day, if it goes well, it doesn't expire worthless. You get to be able to do cash out if you're correct. So, all right, thank you so much for watching, guys. I'm your host, Ryan Razbiani. See you next time. Bye-bye.